Are you thinking about buying a home in Queens this year or wondering whether waiting is the smarter move? Many buyers assume this decision comes down to interest rates, market headlines, or finding the so-called perfect moment. In reality, the most expensive mistakes usually come from waiting without a plan or buying for the wrong reasons. In this video, I'm going to break down a clear, data-driven decision framework buyers in Queens can use to decide whether buying now makes sense or waiting is the better move, regardless of what the headlines are saying. I'm Claudia Louis, your local realtor in Queens, and I help buyers make smart, sustainable decisions based on local market conditions and personal readiness. So let's break it down. One of the most common mistakes buyers make is applying national headlines to a local decision. Queens does not behave like Manhattan or Brooklyn. And even within Queens, neighborhoods behave very differently from one another. As of late 2025, moving into 2026, the median home price in Queens sits around $720,000, reflecting double-digit year-over-year price growth. Price appreciation remains strong, though it has moderated compared to the volatility of the pandemic years. At the same time, inventory has increased. Active listings in Queens are up roughly 17 to 18% year over year, the largest increase among New York City boroughs. This has pushed months of supply higher from around 6 months in late 2024 to approximately 8.5 months by the end of 2025. Traditionally, below 6 months favors sellers. Above 6 months tilts toward buyers. By that definition, Queens is no longer an extreme seller's market, but it is not a buyer's bargain market either. What this means in practical terms: fewer bidding wars, more negotiating room, less urgency to make rush decisions. But prices have not reset. Mortgage rates add another layer of complexity. As of early 2026, 30-year fixed mortgage rates are hovering around 6%, down from peaks near 7% in mid-2025. I had closed 2 properties at 5.85% without buying points. The Federal Reserve has paused rate hikes, and most economists project one modest cut later in 2026, possibly in the second half of the year. However, expectations of dramatic rate relief, rates dropping into the low 5% range, are not supported by current data. Inflation remains above the Fed's long-term target, and economic growth projections have improved. As a result, borrowing costs are likely to remain elevated but stable throughout most of 2026. For buyers, this means one thing clearly: rates should be treated as a constant, not a rescue plan. Before looking at prices, rates, or forecasts, one principle matters more than anything else. Real estate decisions should be life-based, not market time. Instead of asking whether this is the perfect moment, the better question is whether buying fits your life, your finances, and your time horizon. That brings us to the 3 questions every buyer should answer before buying in Queens in 2026. The first question is the most important one. Can the payment be comfortably supported today, at today's rates, without relying on a future refinance? Not whether you qualify, not whether rates might drop later. If the payment only works assuming something changes in the future, that is not a strategy. That is a gamble. Using Queens-specific numbers, A median-priced home at $720,000 with a conventional 20% down payment results in loan amount approximately $576,000. Interest rate around 6.27% means monthly principal and interest is roughly around $3,400. Once property taxes, insurance, and maintenance are added, total housing costs often land between $3,800 to $4,200 per month, depending on property type. Using standard affordability guidelines, this typically requires a household income in between around $160,000 range to remain comfortable without financial strain. This is where many buyers get into trouble. If the payment only works assuming rates drop later, that is not a strategy. It is a gamble. Refinancing should be viewed as a bonus, not a requirement. The second question is about motivation. In overheated markets, buyers often act out of fear. Fear of missing out, fear of rising prices, fear of being left behind. That mindset no longer fits in 2026. Inventory has improved, competition has eased, urgency has declined. Buying for long-term stability, family needs, or commitment to remaining in Queens are rational reasons to purchase. Buying because of pressure, headlines, or panic usually leads to regret. Ownership is not about winning the market. It is about securing a housing solution that fits your life. The third question is about time horizon. Buying and selling real estate is expensive. For ownership to make financial sense, most buyers need a 5 to 7 years window. In Queens, appreciation has been strong, but short-term ownership still carries risks. Time horizon is not a detail. Time horizon is risk management. Average Queens rents for one-bedroom apartments are now around $2,800 per month, and rents rose approximately 7 to 8% last year. At that pace, annual rent increases can exceed $10,000 within a few years. Over 5 years, renters may spend $50,000 to $70,000 more without building equity. Waiting only makes sense when it is intentional, when buyers are actively improving their financial position. Waiting without a plan is how affordability erodes quietly. Queens is not a single market. Entry prices, demand, and buyer profiles vary widely from one area to another. Some parts of Queens offer relatively more accessible pricing but experience strong demand. Other areas balance lifestyle appeal with higher entry points. There are also sections of Queens that support multi-generational living, while others command higher prices in exchange for long-term stability. Because of these differences, the decision framework must always be applied locally. The decision to buy in Queens in 2026 does not depend on predictions. It depends on 3 answers. Can the payment be comfortably supported today? Is the motivation grounded in stability rather than fear? Will the property be held long enough for ownership to make sense? For buyers who can answer yes to all 3 questions, 2026 presents a reasonable window with improved inventory, reduced urgency, and stable rates. For buyers who cannot, waiting is a smarter move. There is no shame in renting. The mistake is buying under pressure. The best decision is the one that holds up years from now, not the one that reacts to the moment. I'm Claudia Louis, and you can book a one-on-one consultation with me on my website, claudialouis.com. See you in the next video.